Hey everyone, so we're going to dive into Bitcoin today because we've broken that key level of $46,000, which was a major level to get above, and essentially now we're trading above the yearly open, which is very significant. And although our bias was potentially to the downside, because with the information that we had in the last month or two that we were below those moving averages and showing rejection, what was to move lower, but we said that if we break $46,000, then we flip bullish, okay, and that our bias to the downside is then negated, okay. So it's always important to have your invalidation points for where you think price is going to go, and it's important also to realize that I'm probably like the most overexposed bear, I guess, in crypto, where I think that prices are going higher in the long term, and I'm holding just like you lot, but at the same time I am hedging, and I'm very cautious with this downtrend that we've had, which is not very usual in the Bitcoin cycles that we've had previously. So we just want to make sure that we're positioned on the right side of the market. So I always said have a little bit of cash on the side just in case we do break lower, but having an all-in approach is also probably not the wisest choice as well. But diving into our key moving averages, you can see on the weekly we're above all the fib moving averages now, so we can flip bullish. And like we said, all of these things are typically going to be confluence at that $46,000 level break. On the daily, there we go, exactly the same, okay. And if we have a look at some of the simple moving averages, which are very key as well, I just wanted to let you know that the 200-day moving average is also coming in at about 48,000, but I don't think this is going to be a key player or anything significant, to be honest. I think the other key moving averages are more important. And then diving it down onto the weekly, if we have a look at the 50, which is the green line, and the blue line 100, okay, that we were talking about potentially getting squeezed here. Is this similar to what we had in 2018? And I lived through this, where we got a rejection at the 50 and then came down and retested and fell apart at the 100. At the moment, it's not showing that. And the weekly close that we got yesterday was so significant, because had we closed below $46,000, that might have left us some room to potentially move a little bit lower and test some of those lower 40,000 levels. But because we closed last week, I think that is a bullish entry, and the bears don't really have a case at the moment, okay. You have to know when to flip your bias, because as soon as we flip the 50, okay, we closed above that on the weekly, on the higher time frames, because we always speak about higher time frames are going to show us higher probability entries and exits, okay. So we've got that, and that means that we've immediately started this week green, okay, and we've already closed above the weekly high that we got last week. So I am expecting some continuation from this move, okay. Now, if this was some sort of fake out, I would expect this to dump in, pretty soon, or at the very latest, by the end of the week, if we got some sort of like big wick to the upside and then we move down. But with the way things are looking at the minute, I would expect this to, start testing these higher regions, which we're going to speak about, and that's going to be $53,000. Important to note that this $46,000 area that we broke, okay, we tested 4 times. Once we test areas 4 times, we typically speak that, on that 4th time, whether it's a trend line or a horizontal support resistance zone, if you do see that, just keep an eye out for that. That typically usually gives you a higher probability signal that we are, moving in the direction to break that support or resistance, which is exactly what we've got. But taking a trade here is not favorable, because taking breakout trades are typically some of the worst trades to take, because you get the worst risk management. It's just usually a trade that makes you feel better because you're buying a lot of green candles and you're buying confirmation. But if you were bold enough, unlike me, to actually go long over here, okay, then congrats to you. I think that you can probably ride this and raise up your stop loss, and that's what I would be doing if I was in that trade. But at the moment, this could come back down here, and then if that does come back down on that off chance, right, then you are risking some hefty 7, 15, 20% moves, if that's where your downside stop losses are. So I just want you to wanted you to be aware of that, okay, should that happen. So where can we expect Bitcoin to move up next? Now, I've marked out this $53,000 area for Bitcoin as a massively important level to look out for, and I'm going to show you why. So we're going to mark this out here in red because this is going to be our resistance zone. Now, to me, this is not only just the most logical area to look out for, but now that we're closing above back into this range, okay, at 46,000 plus, this means that, in my opinion, right, we might consolidate here for a day or two, maybe a week. Is that I think the most likely scenario here is that we potentially move up to this red area, which is the range high where we saw the resistances before at about, you know, $52,000. So I would expect us to have some upside from here in this week of about 10 to 15%. I'm not saying that's going to happen immediately, but this is the key area that I'm looking out for. If we bring out our VPVR as well, you can see very clearly, we speak about low volume areas, okay, very often on this channel, but at 46,000, what did we say? Low volume. We said whatever direction that we do break in, it's probably going to be volatile and violent, and you can see that we typically move from low volume area to the next low volume area. So I don't think that this price action over here is going to stop us moving higher. So over here at about $53,000, we've got key support resistances that we've marked out here in yellow, and also all of this price action that we got back a year ago in April, May. So really keep an eye out on this, okay, should we reach there. So we've got horizontal support and resistance defined very clearly over here. If we bring out our Fibonacci retracement tool, we can see as well that that area is also somewhere in confluence with, it's in between the 0.5 and the 0.618, which to me is the more important area, okay, to be looking out for. So if we do get a push up here into about $53,000, you know, and change, that we might even get a wick up here if we're able to push up this high. So I just want you to be aware of this, is to mark out this whole band, okay, that I'm marking out here in yellow as what I think is probably going to be the main resistance for Bitcoin, you know, if we can move up there and push higher. So we've got multiple confluence there. And if as well, I just clean up the chart and we speak about order blocks, okay, where is the next order block above us that we have not tested? It is this exact area at about 53,000 to 60,000, but really the block you know, is going to be somewhere about $53,500 to $55,000. So somewhere in here, okay, as you can see, is the up candle before the move down back in December that we haven't yet tested. Because back in December, right, we moved from $42,500 up to $52,000, but we never actually tested the bottom of the range over here. So this is why I'm also expecting this area to be a really important area for Bitcoin to overcome, and it's probably going to be the next major resistance that we see here. I don't think, like I said, this is going to pose too much trouble for Bitcoin, in my opinion. So long as we hold this area at 46,000, I think Bitcoin is probably building up for you know, some pushes up higher into this zone. So the way that I'm also looking at this as well is if we just mark out this red band over here, which is our resistance zone, okay, when we start approaching here, just start looking for potential bearish structures should we get there. Something like three patterns, three higher highs over here where we're sort of like pushing higher and creating some divergences on the RSI, or if we get some massive wick to the upside, swing failure pattern, and then close, you know, somewhere back down here. So these are the things that I'm looking for at this area. I'm not looking for shorts after this, you know, big green candle. So yeah, so those are the things, that's the way that I'm looking at Bitcoin for the time being. And don't forget, everyone, to drop me a like down below, please. That massively helps me out. Okay, go ahead and do that if you haven't done that already. I'm coming out with more daily videos this week to keep you on the right side of the market with some of the other altcoins and areas of value to buy into. So subscribe to the channel as well if you haven't already. Another thing that I wanted to draw your attention to, which is really important in my opinion, I still think that CME gaps actually are something really important to play note of, because they typically, all these gaps typically always get filled, right? I could literally show you 95% of them, both to the upside and to the downside. Now, we've got some gaps below us that we don't really need to worry about. We spoke about these potential gaps giving us confluence at maybe an all-time bottom, but what is also at that $53,000 level is this block of price action that we slice straight through at $53,000 and $55,000, okay, that we have not yet tested. So I would not be surprised that, you know, on the futures chart, if we maybe tag this CME gap, trap everyone over here, okay, and then dump it lower, okay, because this is an easy play in my opinion. Is once you get to 46, trap everyone, move up about 10-15%, trap everyone in with the bulls, and then, you know, dump it back down. So that's another thing that I'm looking at this level is I think we're getting a lot of reasons here basically to be weary of, you know, sustained up move. So we want to see how we react here. It's important to also note as well that I do think that the 4-year cycle is still potentially in play. This was not something that I had initially counted on too much weight at the start of the year, but the way that this is played out, I think that this might be, you know, the automatic rally, or should I say the bear market rally potentially, okay, if we can get this move up higher and then reject and then start creating bear market structure that you know, might play out. Because if we start to create that sort of structure and we move lower, then the 4-year cycle would dictate to us that, you know, we basically essentially spend 3 years in an uptrend, or maybe 2 years sort of consolidating, grinding back up, and 1 year in a brutal bear market. And if that was to happen, which, you know, typically lasts anywhere between about 400 to 450 days, that would typically take, you know, Bitcoin to a potential low at about $25,000, or somewhere between $20,000 and $30,000, you know, down the line, maybe later this year. So that's definitely something that I'm keeping an eye on. Like I said, I'm hedged in both directions either way, because I always have some exposure to crypto, but I am looking to see what sort of reaction we get at that $53,000 area. So let's see how we move from here. Important also to have a look at the DXY, because this isn't really what I would be expecting, okay, from Bitcoin, from a macroeconomic point of view, because the DXY index is actually still moving higher here and showing continued strength, which typically puts pressure on Bitcoin. I think the reason that Bitcoin is moving up today is basically just on a pure technical level, where as soon as 46,000 breaks, okay, right, I think everyone knows, right, okay, you can probably relinquish your bearish, you know, biases at this level, because there is no reason to be bearish here. Okay, we're now moving up to start potentially testing those areas above us. So I do think that even when the DXY is looking strong, we can still have these massive counter rallies in Bitcoin. So just keep an eye on that. But, you know, I can't argue that Bitcoin is still looking pretty good at the moment, and maybe we do get lengthened cycles, but that's what I'm looking out for as the first area is $53,000, and then an invalidation at any of this point would be either a quick dump down here into the $40,000 region, okay, but if we can hold here, I think that we push up here and challenge this band. Last thing I wanted to comment on was this triangle pattern that we spoke about in the last week or two that could have been drawn in a number of different ways. And this does now look, you know, pretty similar to the one that we got in 2018. Okay, if we roll back down to over here, which I lived and experienced every single minute and day of. Okay, I can remember it like a picture in my mind. Is that we got a massive move here in 2018, but I'm not sure we get as big of a move as this, okay? And the reason, you know, for that is that at the time we literally fell off a cliff and dropped 50% with no retracement, no stopping at any point, okay? And we literally fell off a cliff, and essentially when we broke down into this consolidation pattern, as soon as we broke back out of it, because there was no volume here and no price consolidation was taking place to the downside, that we basically sliced straight into the next level and basically doubled in price really quickly. Whereas now, I can't argue that we might get to $53,000 pretty quickly. Okay, that's definitely a possibility and something that I see on the cards, but there's definitely a lot more areas of sticking points and resistances and price consolidations that we need to battle through, as well as being a more mature asset. So just realize that, if you are comparing this as well to 2018. So if you got some value from this video, like I said, please go ahead and drop me a like down below. Hopefully that, it's showing you and teaching you about these key levels when trading is helping you out, and you're realizing where price is going to move and how it's going to be volatile, because we spoke about these things a week or two or three ago. And although our bias was to the downside because we were below all those key moving averages, and the charts were showing us that we moved lower, we knew that 46,000, okay, that's when you flip your bias and you start to get a little more bullish on the asset, because we know that basically there's not a lot of volume here and we're probably going to slice and punch straight through this quite quickly. Smaller magnitude, but the fractal might look fairly similar. Like and subscribe if you haven't already, and I'll see you in the next video.